$47 billion. Gone in a day. This was 2019's biggest business scandal. A company went from being more valuable than Tesla to becoming worthless in 6 months. How is this possible? How did the world's smartest investors fall for such a massive deception? Adam Neumann, an entrepreneur from Israel. He founded an ordinary business renting office spaces. Then he began to see himself as superior to Steve Jobs. He claimed they were changing the world, shaping the future of humanity. And the incredible part? Everyone believed him. SoftBank invested billions. Goldman Sachs underwrote its IPO. The media proclaimed him a new generation leader. But the reality was completely different. This was one of the biggest deceptions in modern business. The pinnacle of fake-it-till-you-make-it culture. And its collapse. This is the story of the world's most expensive lesson. Adam Neumann, 31, was a charismatic dream chaser who had come from Israel to America. Tall, energetic, with a constant sparkle in his eyes. He was a man who used his hands when speaking, delivering every sentence like a manifesto. Sitting across from him was Miguel McKelvey, his complete opposite. 36 years old, a quiet but talented architect from Oregon. Thoughtful, analytical, a cool-headed partner who balanced Neumann's wild energy. Neumann set down his coffee cup and described the contradiction in Manhattan's office market. Renting an office cost $8,000 to $10,000 per month, but most of these offices sat empty half the day. After 7 p.m., it looked like a ghost town. Both had experienced failed startup ventures before. Neumann in baby clothing, McKelvey in sustainable design projects. Both had started with big dreams only to end in disappointment. At this meeting, Neumann proposed a revolutionary idea, offering people not just desks, but community, networking events, common areas, a sense of commune. Creating spaces where employees would eagerly anticipate coming to work each morning. This conversation marked the beginning of a revolution that would change modern work culture. But at that moment, none of them could predict it would end in a $47 billion collapse. From the start, Neumann showed warning signs, blaming failures on others, seeing himself as special, and dreaming impossibly big. These patterns would later drive every disastrous decision. They rented a small building in Brooklyn's Dumbo neighborhood, just 30 to 40 desks, $300 to $500 monthly rent. Their first customers were young freelancers and small agencies, web designers, software developers, young professionals doing consulting work. Everyone shared the same problem. Working from home was demotivating. Cafes too noisy. Traditional offices too expensive. Neumann's energy had captivated customers. He greeted arrivals every morning, took interest in everyone's projects, tried to help them grow their businesses. This personal attention and sense of community became the key factor distinguishing Green Desk from other workspaces. 6 months. Just 6 months later, a waiting list had formed. The 30-desk office in Brooklyn had become gold for New York's young professionals. Neumann and McKelvey began receiving offers to open other locations, but Neumann had much bigger plans in mind. By autumn 2011, they had sold Green Desk for $15 million. This was like a fortune to them, but Neumann's targets were much bigger. Manhattan. Brooklyn was just the beginning. The real battle would be fought in Manhattan, on Wall Street, in Midtown. That's where the real money was. And Neumann was determined to reach that money. These words heralded the birth of WeWork. And this birth would be the beginning of one of modern startup world's greatest tragedies. Green Desk was too specific. The new concept should be broader. We work, we live, we create, we work. When they found the name, both got excited. It wasn't just working, but emphasized working together. Sense of community, collaboration, synergy. When the first WeWork location opened in April 2011, it created an atmosphere never seen before in Manhattan. Coffee bar at the entrance, lounge areas, whiteboards, meeting rooms. But the real difference was the energy and sense of community Neumann created. Neumann was there every day. He gave personal tours to potential members, started conversations at the coffee machine, tried to learn everyone's name and business. He wasn't just renting desks to customers. He was including them in a vision. This approach had captivated customers. WeWork was marketed not just as an office, but as a community of people changing the world. And this message was effective. The first serious offers from venture capital began arriving. Between 2012 to 2014, WeWork's growth was breathtaking. A new city every 6 months, a new location every 3 months. After the initial success in New York came Boston, then Los Angeles, followed by San Francisco. Every opening ceremony was like a festival. WeWork wasn't just in the office rental business. It was selling a lifestyle. It had become the temple of startup culture. When someone succeeds early, everyone assumes they'll succeed everywhere. Employees and investors fell into this trap. If Neumann could build great offices, surely he could revolutionize everything. Community managers, who started in 2013, described how Neumann came with that energy every morning, taking interest in everyone's projects. He was genuinely curious, trying to help them grow their businesses. But the real transformation happened at the end of 2014. Neumann began giving speeches at technology conferences. When he took the stage at TechCrunch Disrupt, the audience welcomed him as a technology CEO. He declared that they weren't just a real estate company, but a technology company. They were collecting data, doing community analytics, designing the future of work. This positioning created a magical transformation. While real estate companies got 8 to 12 times valuations, technology companies could get 20 to 50 times valuations. WeWork's story was now in a different league. In 2015, a $355 million Series D investment came. Valuation rose to $10 billion. Neumann was now a member of the Unicorn Club. With this money, international expansion began. London, Tel Aviv, Amsterdam. Every new city was like a conquest for Neumann. He began traveling the world in his private jet. WeWork was no longer just a co-working space, but had transformed into a global brand. And Neumann began to see himself as the sole architect of this success. But no one predicted that this rapid growth would spiral out of control in the coming years and drag the company to the edge of a cliff. 2016 marked the real turning point. Meeting Masayoshi's son. SoftBank's CEO's son intended to turn the technology world upside down with the Vision Fund. The $100 billion fund was history's largest venture capital fund, and Son was ready to make aggressive bets. His first meeting with Neumann became legendary. Son listened to Neumann at WeWork's Manhattan office. Growth figures, expansion plans, community vision. Everything caught Son's attention. Son's decision-making process was surprising. After talking with Adam Neumann for just 12 minutes, he decided to invest $4.4 billion. In his later explanation, he would say he saw fire in Neumann's eyes. In March 2017, the bomb exploded. SoftBank announced it would invest $4.4 billion in WeWork. This figure created a shock effect in the technology world. $4.4 billion was larger than the total valuation of many unicorns. WeWork's valuation jumped to $20 billion overnight. For Neumann, this money wasn't just investment, but validation. Proof that his vision was correct, that they were building something special. The years 2017 to 2019 became both the peak and the beginning of the abyss for WeWork. With SoftBank's $4.4 billion investment, the company began uncontrolled growth. They were no longer just office space. They were getting into everything. Neumann had presented the idea of eliminating boundaries to the board. They understood community better than anyone and believed they could apply this understanding to every field. But Neumann's real dream was bigger. The WeOS project, WeWork's own operating system. Complete workplace solution for companies. They would provide not just space, but software too. During this period, Neumann's behavior began to become increasingly problematic. The atmosphere inside the company was getting strange. He would call meetings at 6 a.m., organize strategy sessions at midnight. Stories began circulating within the company about smoking marijuana in the office, coming drunk to important meetings. With SoftBank support, the company growing, and media portraying him as a genius, who could criticize? Son only heard what he wanted to hear, the growth numbers, the grand vision. He ignored the warning signs. This is how smart people make terrible decisions. They stop questioning their assumptions. By the end of 2018, WeWork had 400 locations and 400,000 members. Every metric was rising like a rocket. But there was a problem. They were running out of money. Rapid growth had become very expensive. Each new location required $2 to $5 million initial investment. Total rental obligations exceeded $18 billion. But revenue growth was slowing. In 2018, WeWork lost $1.9 billion, a 100% increase from the previous year. The CFO began to panic. Neumann's answer was as always. They needed to grow more. At the beginning of 2019, SoftBank stepped in and invested another $2 billion. With this money, WeWork's valuation rose to $47 billion. It had become one of history's most valuable startups. Neumann was now a global celebrity with his multi-billion-dollar personal wealth. He was giving speeches at Davos, dining with the world's most powerful CEOs. Employees continued to be impressed by this confidence. Their stock option values had multiplied. Everyone was waiting for the IPO. But during the same period, serious cracks began forming inside the company. Experienced executives began leaving the company. In summer 2019, the big decision was made. WeWork would go public. They would IPO under the name the We Company. Neumann saw this as an opportunity to prove himself as one of the world's most successful CEOs. No one knew that this IPO process would be the beginning of WeWork's end. WeWork was preparing for IPO with a $47 billion valuation. Adam Neumann felt himself on the verge of historic success. But Wall Street had very different plans. When WeWork's IPO prospectus was submitted to the Securities and Exchange Commission in August 2019, alarm bells began ringing on Wall Street. The 300-page S-1 form revealed a very different picture from marketing slogans. WeWork's business model was actually very simple. They signed long-term lease agreements and then subleased short-term. But this model had serious risks. In an economic crisis, customers could flee quickly while WeWork could get stuck with long-term rental obligations. Worse yet, financial metrics didn't comply with normal accounting standards. They had invented a term called community-adjusted EBITDA. In this calculation, marketing costs, administrative expenses, and even share-based compensation were excluded. The real numbers were frightening. Against $1.8 billion revenue in 2018, there was $1.9 billion loss. So the company was spending more than $1 for every dollar it earned. But the real scandals were Adam Neumann's personal conflicts of interest. Hidden in pages in the prospectus, Neumann owned 4 of the buildings WeWork rented and was collecting rent from his own company. He had first acquired the trademark rights to the word we for his own holding company, then sold it to WeWork for $5.9 million. He had taken personal loans using WeWork shares as collateral, using the company like his personal ATM. Wall Street Journal reporter Elliot Brown began deeper investigation into WeWork. Statements from employees were even more striking. He openly smoked marijuana in the office. Rebecca created a toxic environment. Company culture felt like a cult. In the first week after the prospectus was published, WeWork's targeted valuation dropped from $65 billion to $47 billion. But the decline continued. $35 billion? $25 billion? $20 billion. Deutsche Bank analysts published a report. WeWork is at least 80% overvalued. Target price, $10 billion. Following these reports, potential investors began to cool off. Major funds like Fidelity, T. Rowe Price, and Vanguard said they were passing. Neumann initially tried to characterize these criticisms as lack of vision, but roadshow meetings were going disastrously. Institutional investors were bombarding with questions. What is this community-adjusted EBITDA? Why are you renting property from your own company? Is this growth sustainable? Why is corporate governance so weak? Neumann's answers weren't convincing. A portfolio manager from Cal PERS noted in his post-meeting assessment that this man had no idea what he was talking about. Numbers didn't add up. The story wasn't logical. Media pressure was also increasing. The New York Times ran a headline: WeWork's CEO makes millions while company loses money. Financial Times took a more analytical approach. WeWork represents everything wrong with unicorn valuations and founder worship. By this point, Neumann had lost touch with reality. When the entire market rejected his company, he called it lack of vision. This is what happens when someone's inner fantasy becomes more real than the outside world. By the end of August, the situation had completely spiraled out of control. WeWork's targeted valuation had dropped to $15 billion. Even SoftBank began to worry. Masayoshi's son had an emergency meeting with Adam Neumann. Adam, we need to stop this IPO. Market conditions are terrible. But Neumann didn't want to give up. This was temporary, he insisted. In early September, the final bomb exploded. Wall Street Journal headlined with news that Neumann had been caught storing marijuana on his private jet. The same report mentioned that he had forgotten a tequila bottle on the G650 jet and the plane needed to be detoxed. Now WeWork was being openly mocked on Wall Street. It was suggested that WeWork's stock symbol WE should be written as LOL on Bloomberg terminals. Monday morning, September 9th, 2019, the inevitable happened. WeWork postponed its IPO. Wall Street's response to WeWork was clear and ruthless. The $47 billion valuation was nothing but fantasy. But Adam Neumann still wasn't accepting defeat. The IPO was cancelled. Valuation had crashed. Pressure was mounting for Adam Neumann's resignation. Now only one question remained. Could WeWork survive? An hour ago, his lawyer had called with the final news. Adam, it's over. The IPO is cancelled. The journey from $47 billion to zero was completed in exactly 30 days. By early September, WeWork's situation had become uncontrollable. Every day brought a new scandal. Valuation dropped further. Investors were fleeing. On September 9th, the final bomb exploded. Wall Street Journal's marijuana story about the private jet. Now, Adam Neumann was seen not just as a failed CEO, but also as someone displaying unprofessional behavior. On September 16th, the inevitable was announced. WeWork was postponing its IPO. This phrase fooled no one in the media. Everyone knew the truth. The IPO was dead. The same day, WeWork shares crashed in private markets. From $47 billion to $15 billion, then to $10 billion. Employee stock options became worthless overnight. The atmosphere in the offices was like a graveyard. No one was talking. Everyone was staring at their screens. But the real bomb came from Masayoshi Son. SoftBank CEO was having his final conversation with the man he had invested $4.4 billion in. Adam, we trusted you. But right now, the company is on the verge of bankruptcy. Either you resign, or we pull all funding. This was the ultimate ultimatum. Without SoftBank, WeWork's cash flow would end within 2 months. 12,000 employees would lose their jobs. 500 locations would close. September 24th, 2019. Adam Neumann's CEO career ended. The resignation letter was surprisingly short and simple. I have decided to resign as CEO. I will remain as chairman and focus on strategy and vision. The media was ruthless. The rise and fall of Adam Neumann headlines were being made. CNBC was doing How WeWork Became We Didn't parodies. But the most painful comment came from Financial Times. WeWork represents the pinnacle of founder worship and venture capital excess. Adam Neumann wasn't a visionary. He was a salesperson selling illusions. In early October, the situation worsened. The company's cash position had dropped to critical levels. WeWork's CFO, Adam Neumann, called an emergency meeting. We have 6 weeks of money. After that, bankruptcy. Layoffs began. First 500 people, then 1,000, then 2,000. WeWork's famous hustle culture was replaced by survival mode. Adam Neumann was now only chairman but wasn't even coming to the office. He was hiding in his Hamptons house talking to lawyers. He was waiting for SoftBank's rescue offer, but the price would be heavy. And it really was heavy. SoftBank was ready to rescue, but with one condition. Adam Neumann would completely withdraw. Not just CEO, but chairman, board membership. Everything would end. Masayoshi Son's final word was clear. Adam leaves, or WeWork dies. By October 2019, WeWork was on its deathbed. Cash had dropped to 4 weeks. 12,000 employees faced the threat of unemployment. Property owners were threatening over rent payments. For SoftBank, this wasn't just a business decision, but a matter of ego. Masayoshi Son had invested $18.5 billion in WeWork. Total loss of this investment would destroy Vision Fund's credibility. But the rescue operation wouldn't be easy. The first condition was clear. Adam Neumann must completely withdraw. Neumann strongly opposed this. SoftBank's COO, Marcelo Clore, was diplomatic, but firm. Adam, you created something amazing. But now this company needs operational excellence to survive. Negotiations lasted 2 weeks. Neumann's lawyers negotiated for maximum package. SoftBank wanted minimal damage control. The final deal was shocking. Adam Neumann would withdraw from the chairman role and board. In return, SoftBank would first make a $1 billion personal share buyback. Second, pay $185 million consulting fee. Third, provide a $500 million personal credit line. Total, $1.7 billion. When Wall Street Journal learned these figures, it headlined, WeWork's failed CEO gets $1.7 billion golden parachute. Public reaction was brutal. While WeWork employees faced mass layoffs, the failed CEO was getting billions of dollars. Employees revolted. Protest messages flooded WeWork's Slack channels, but SoftBank had no other choice. Neumann had voting control. Without a deal, bankruptcy was inevitable. Neumann fought the exit until the end. He couldn't accept that his vision had failed. When reality clashes with someone's self-image this violently, the mind chooses self-image every time. On October 22, 2019, the deal was signed. Adam Neumann officially left WeWork. The 9-year journey was over. His final statement was short and cold. I'm grateful for the opportunity to build WeWork. I'm confident in the company's future. Now WeWork's new owners were SoftBank. Taking 80% ownership, they took total control of the company. Adam Neumann's era was over. But the story wasn't finished yet. His first task was major restructuring. 8,000 of 20,000 employees were laid off. Side projects like WeGrow and WeLive were shut down. Focus. Core co-working space business. By early 2020, WeWork was beginning to stabilize. Occupancy rates improved. Cash burn decreased. Operational metrics got better. But then a bigger problem came. COVID-19. March 2020. When the pandemic lockdown began, WeWork's business model completely collapsed. Who needs office space when everyone works from home? When Mark Zuckerberg said remote work is permanent, 50 people working in WeWork's San Francisco office looked at each other. Facebook's CEO had declared remote work as the future. And at that moment, everyone understood. WeWork's story was truly over. The COVID-19 pandemic created a perfect storm for WeWork. The company's core business model, bringing people together, was no longer possible. Social distancing, mask requirements, capacity restrictions, everything was against WeWork. Throughout 2020 to 2021, customers mass migrated. Corporate customers canceled contracts. Startups gave up office space. Remote work tools like Zoom, Slack, Asana became popular. CEO Sandeep Mathrani took desperate measures. Another 4,000 people were laid off. Over 100 locations were permanently closed. Rental obligations were renegotiated. WeWork's iconic amenities were removed. Company valuation continued free fall. In SoftBank's internal valuation, WeWork was now worth $8 billion, an 85% drop from peak. In 2021, the last hope, SPAC deal. They would go public by merging with BOX Acquisition Corp. Even a name change was made. No longer the We Company, just WeWork Incorporated. But even the SPAC deal was difficult. Investors were skeptical. The public market had given WeWork its ruthless answer: not interested. But the strangest part of this story was Adam Neumann's comeback story. The tech world was shocked. Mark Andreessen defended. Adam learned from his mistakes. This time will be different. In 2022, stock price dropped to $2. In 2023, to 50 cents. Market value, $500 million. A 99% drop from 2019's $47 billion. Mathrani resigned. New CEO David Tolley came, but it was mission impossible. Remote work had become permanent. Office demand was at historic lows. In November 2023, WeWork filed for Chapter 11 bankruptcy protection. The 9-year journey officially ended. The press release was ironically brief. WeWork Incorporated has filed for bankruptcy protection. Company operations will continue while we restructure our debts. SoftBank's total loss: $24 billion. Number of employees who lost jobs: over 15,000. Property owners stuck with empty buildings: hundreds. Investors who lost money: thousands. Adam Neumann's comment was even more ironic. It's sad to see WeWork's current state. The company had so much potential. I hope the team finds a way forward. But the story doesn't end here. By the end of 2024, Adam Neumann again announced a new venture. This time, artificial intelligence plus real estate. Neumann Ventures raised $100 million fund. The tech community was divided. Supporters said everyone deserved a second chance, maybe he learned. Critics said fool me once, shame on you, fool me twice. And today, as of end of 2024, WeWork buildings are empty, iconic neon signs turned off. Do what you love. Posters removed. Adam Neumann is making new plans in the Hamptons. Net worth, $2.3 billion. Former employees are job hunting on LinkedIn. SoftBank is organizing lessons learned sessions in its portfolio. Mark Twain's words perfectly summarize the WeWork story. History doesn't repeat itself, but it rhymes. Because WeWork isn't just a company's collapse story. This is the end of an era. The end of the 2010 startup euphoria, unlimited money period, and fake it till you make it mentality. Adam Neumann's story is a perfect example of how charismatic leaders can game the system. Investors, media, employees, everyone saw him as visionary. No one asked, but does the math work? In the shadow of successful founders like Steve Jobs and Elon Musk, every charismatic CEO began to be seen as a genius. WeWork was the price of this delusion. WeWork's fundamental problem was simple. They were losing money on every customer. The profitability comes at scale logic was delusional. Fake metrics like community-adjusted EBITDA were created to hide real problems. Adam Neumann's total control with dual-class shares accelerated WeWork's collapse. No board oversight, no accountability, no checks and balances. WeWork grew during the cheap money period. Interest rates low, venture capital abundant, investors risk-tolerant. But when market conditions changed, reality check came. WeWork's collapse wasn't individual failure but systemic problem. Too much money chasing too few good ideas. Too many investors making decisions from FOMO. Too little accountability at the top. And most importantly, history will repeat. With different names, different companies, but same patterns. Because human nature doesn't change. Greed, ego, delusion, they're all still there. After WeWork, the VC world changed. Due diligence strengthened. Unit economics examination increased. Governance requirements tightened. Founder control was limited. Profitability timeline shortened. Growth at any cost mentality was replaced with sustainable growth. WeWork wasn't just one man's failure. The whole system was broken. Investors afraid of missing out, throwing money at bad ideas, and nobody asking hard questions. Fear and greed drove every decision. The WeWork story isn't just a startup's collapse. It's a modern version of a recurring pattern in financial history. So how did Lehman Brothers fail? What decisions led the 158-year-old prestigious investment bank to drive itself off a cliff? And most importantly, why did that collapse shake the entire world economy? When Adam Neumann's story ends, we'll look at one of financial history's biggest dramas. Because every collapse story carries signals for the next one. What lessons did this story give you? What do you think about valuation bubbles in tech companies? Share your thoughts in the comments, and don't forget to follow us for the next big financial drama.